Hi, this is James Shug with Westpac London's end of day report for Thursday the 15th of December. Well, it was a bit of a reversal of yesterday's pretty significant risk off trade with equity markets doing a little bit better today, a little bit of a bounce coming through. We had some less weak PMI, manufacturing and services survey figures in Europe. The Spanish had a better take-up of a bond auction than had been anticipated, and a swathe of US economic data was released today, and I suppose most of it had a positive tone, although not all of it. I'll run through that a little bit later. So equity markets were positive today. In fact, I'll just jump into them now. We saw in Europe a gain of 0.6% for the FTSE, the French market up 0.75%, and the German market up 1%. Now that was all still despite mounting speculation that there's going to be a ratings downgrade for quite a few of the European sovereigns, including possibly AAAs or current AAAs like France. And this has seen the French central bank governor, Christian Noyer, spit the dummy a bit. He said, well, if anyone should be downgraded, it should be the UK. They've got bigger fiscal deficit, bigger public debt, and higher inflation, which is all true, but not really relevant, given that the issue that the ratings agencies are worried about is the lack of a political ability of European governments to put in place measures to stem the sovereign debt crisis. It was interesting too that Christine Lagarde said that the crisis is escalating. She's the head of the IMF now, of course, that the crisis is escalating, and that various countries need to put in measures to reform their economies and improve their fiscal position now. The irony being, of course, that as French finance minister, she didn't do just that, just up until she switched jobs earlier this year. Okay, enough of that. In terms of the data today, the highlights, I suppose, in the US were big jumps in the New York and Philadelphia Fed factory surveys for December. Both jumped to around 10 from around 0 and 3, for 0 for New York and 3 for the Philly index in November, both at 10 in December. And the detail, particularly in the Empire, or the New York Fed index, was particularly solid too on orders, shipments and jobs. We had a soft producer price report, PPI report, particularly the core rate. The core rate there now has been soft for 4 months running, August, September, October, November, averaging just 0.05 of a point. So, less than 0.1% per month there. That compares to 0.3% per month in the previous 4-month period. So a sign that inflation pressures are coming off the boil in the US. We had a big drop in initial jobless claims, a measure of the extent to which workers are getting laid off, down 19,000 to 366,000 in the last week. That's the lowest since the US entered recession, actually, back in 2008. We had industrial production. It was actually softer. It fell 0.2% in November, and that was the first fall in this current half year. In fact, manufacturing output actually was down 0.4%. Cars, in particular, autos, was a big source of the weakness there. That's it for the other US data. Current account deficit narrower, no surprise there, and there was tick data showing less capital inflows into the US in the month of October. The other data around the globe, I mentioned the PMIs less weak in Europe. We had European inflation confirmed at 3%, and retail sales in the UK very soft, down 0.4% in November after a pretty strong October. An industrial survey from the CBI for December was also soft, further deterioration in the orders picture in the UK. So certainly we are getting evidence in support of the view that the UK economy is either in recession or sliding towards a recession, which we think will be mild, given the partial data that's coming out at the moment. So I've done European equities. On the US equity front, the Dow's currently up 0.75% at 11,912, with the positive data flow, mostly positive data flow, particularly jobless claims, helping, and those business surveys helping equities along today. Some days good data actually doesn't help the market if it diminishes the case for further Fed easing, but given that the Fed didn't really signal that they were inclined to do any more at the latest meeting, any more than they did at the previous meeting, markets, I think, have chosen to view good data as a positive for the market. On the commodity side of things, some reversed their losses yesterday. Copper prices, actually the copper prices, they were up, they're actually unchanged now on the day. In fact, gold's down further, down 0.8% at $1,574 an ounce, and oil's down 0.9% at $94.09 a barrel. Aussie dollar, about 99.4 US cents at the moment. So it's actually little changed from yesterday. When I did this report yesterday, it was just above 99 cents, and it's just crept up a little bit since then. All right, that's probably it for today. Done the equities, done the commodities, done the data, done the French thing, and it's time for our Christmas drinks. So I better pop off.